Ben.
Ah, hello there.
Hello there. I'm doing headphones today. Try not to be disruptive.
Yeah, I'm home alone at the moment, so I don't have to, I guess.
Hey, home alone, that's great. I don't think I've ever been home alone for longer than 10 seconds. Till the kids come around. Mr. Real, how you doing? I assume silence means great.
Very optimistic.
Yeah. So how you guys surviving this week so far?
Well, I was long Friday. So that wasn't fun, but not too bad. I wasn't it was kind of like a small-ish position. I had a pretty hefty I was pretty heftily, pretty sizable cash position, so that was okay.
Okay.
It was enough to hurt, like sting a little bit, but not enough to that I'm like remortgaging my house or anything.
Yeah, we don't want to do that.
No one has to do that. Yeah.
No, nobody wants to remortgage their house. No.
I'm still alive.
Position size is too large. Yeah, so I can probably get rolling here. Yeah, I had to change the change the time today. So hey, Mr. Real. Sorry, I had to change the time here, but yeah, the logistics between like going to pick up my kids and
fine. Yeah.
whatnot. Yeah, it also seems to, some people like on the West Coast and stuff too might not get a chance to join a little bit earlier in the day. So, cool. All right, let's. I guess we can just jump right in. Um, so before we do that, though, does anybody have anything you'd like to cover specifically? Any questions?
No. Not for my
Nothing.
MicroStrategy as usual.
MicroStrategy, sure, I can cover that. Yeah, I'll have to dive into that a little bit because it's not necessarily like mapping to crypto right away. So yeah, so before I go into like any of the metals and stuff, I'll cover MSTR first. But okay, so let's just do like a quick overview of like where we're at. Here we go. Entire screen. I don't know if it's a good thing or a bad thing. Here we go. All right. So we'll start out with the Nasdaq here. Pretty much, I think what we're seeing is like we had this very conveniently timed news release about China not following rules and this, that, and the other thing. Well, I actually think it was very conveniently timed. I think pretty much anything could have set this market off at that point. When I zoom out here and I take a look, there's a bullish case and a bearish case. I will go over the bearish case first, just because there was such high volume, but I also want to spend some equal amount of time on like the bullish case. Because the bulls have been really fighting hard to stay above this 50-day moving average here, and I just wanted to call attention to that and what step of like what rally or whatever we could be in. Okay, so with that being said, so just taking a look here at the Nasdaq. I haven't really moved any of the lines since last time that we talked, or last week when I think I did my solo demo or whatever. But if I were to properly measure this here, you would see that this tops out like this 2.618 extension, this wave 3 here. This is a common reversal point for a wave 3. It hit right at this 25-200 level. This is only off by a couple points because the distance is so large here to measure a couple points. But just rest assured, I have accurately calculated this, and it really hits it like to the pin. It's awesome. And also it's nice and round. It's not like 0.12, so you can kind of think that like, all right, that's probably like it, at least for this wave. I mean, you can see it's been a monster wave up. And within this, what you can see is some rough patches of this larger wave 3. So let me change this, add this a little bit more context here. All the way from that, the April low here being like that wave 1. So you can see this is like an ABC corrective here. And then we finally got this big long extension up here. And to be fair, this might not be a wave three. It could be like a C leg, you know, the regular sort of correction. But the higher it went, I kind of think that it's you know, it is a wave three here. And just given it, you know, given how bullish it has been recently, I think that it's fair to assume. So, you know, you can kind of see that this is a very extended, you know, wave three here, but we're due for a pullback. I think we all know that. But the severity of the pullback really is the next thing you want to take a look at. So when we zoom in here, I guess the first thing that we want to do is we want to determine, like we want to kind of take a look at what happened in the past, and just to try to inform like our wave counting and things like that. This, I'll clear this out of here. This this little box here, this I believe is like it's the most rare form of regular correction. It kind of looks like a triangle, but kind of not. This actually counts out pretty close to it's like a truncated C leg. Usually you'll see something like this, where you know, like in this part here, you'll see like a lower low. You know, that I think we're talking about something like that, but ended up just bouncing right on that 50 DMA. And sorry, the 50 is purple, the turquoise is 200. But pretty much, you know, you don't really see that very often. But since it was only a few points above the low right here, that's where I think that we're starting to see, or that I think we can conclude here that our final wave is done for the fifth wave. And this is super important because we still need to know like whether we're done or not, you know, because like as we're looking at this price ascending higher and higher, there's going to be a limit, and I'll go through that here in a second. But and this kind of applies to I wouldn't say like all the indexes. Like the Dow looks a little weird. Same thing with small caps. There's unexpected new high with small caps, but small caps are erratic anyways. But I think what we're looking at here is like the final, I guess, like the final termination. Now, if I just counted out that other wave three that we had, and this is sort of the same sort of context. Now, I'm sorry. Let me kind of clean up the counts here a little bit so it looks a little nicer. So I'm just really just going up a degree with each one of these. So you can kind of see here as we zoom in that that you can count. You know, we've got this irregular fourth, which is in the higher degree, and then we have this 1, 2, 3, 4, 5. And you can also count here that not only did we have these three waves, but as I tighten that up a little bit, but we also had this like 5-wave pattern here on the high side as well. So let me illustrate that for all you fine folks watching at home and also present live. So here's kind of what I think we just saw over the last like couple of weeks and days, and this was pretty fast. This was already from at the end of September here, but if I just make this a little bit more clear, you can kind of see that this 5-wave here doesn't really violate many of the rules. It looks like it had kind of a deeper wave forward. Things kind of get a little squishy when you get to tops, especially with like wave counting. So you got to kind of take it with a grain of salt, but it should typically stay within reason, or like within the confines of like wave counting and patterns and stuff. So knowing that, as we kind of head backwards here, and as we were zooming in, you can kind of see that we have pretty much finished these like 5-wave counts. It is possible that we might not be done, and I'll cover the bullish scenario first. I think it's more unlikely without a deeper correction yet, but it's possible we could, like this wave 4 low here, or like that low that we put in. It doesn't look like it's impulsive at this point. We've already had enough retracements. Normally what you would see is like if this was a true wave 3, you would see some sort of high tight channel. And you guys, we've seen this before, right? Like it looks significantly different when you're staring at a wave 3 that's something like this, where you can kind of see that there's a little bit of give and take, but essentially it stays within the channel, right? It's essentially confined. You know what I mean? Can't talk. But wave 3s are typically easy to spot in hindsight because they look very linear, like just up and to the right, and then you get these wave fours here, which can be, this is like a double, call it double zigzag. And we started making some long calls right around there anyways. I kind of thought they might push it a little bit lower. Like I'm waiting for a 5-wave down because that would signify like the next sort of move here. But I guess the last thing I want to highlight about this is if this is like if we are going to make a new high or something like that, which again, I don't think it's going to happen, but I have been wrong many times. My wife's within earshot, she'll tell you, but she'll be nice about it. Okay, oops. So I'll just, so in the event that this is a wave 4, and like this turquoise line is modeling here, you could see something as easy as this where, sorry, 1 second, let me get all this crap out of here. You could see something as easy as this where, you have some sort of like flat correction. And you could see, something just as simple like this where, it keeps bouncing on this 50 DMA. So this is the only thing that I'm thinking about. And again, if you just kind of box it like this, this could be a wave 4, like a smaller wave 4, and then you could potentially see like a last wave driving higher. The only thing I think, I don't think this is super realistic at this point, just because you can kind of tell that there's, saber rattling and stuff going on with China, and it kind of seems like bad news is starting to matter again. And if you start to look at something like the S&P, you can see here that we've got some pretty clear, like a pretty clear 5-wave pattern up here, and we all kind of thought that this might have been it too, as you can already see, the 5-wave pattern here too. Just turns out it was wave 3. So the next step is really trying to determine where these pivot points are, and you can already kind of see here, like with the different indexes, that we've got these channels going here, and typically you see these with like a wave 2. And what I'll draw that out here in a second. So again, this is the bullish scenario where you have, let's say, tomorrow morning you wake up and you look at the market's already, it's already up 1%, that kind of stuff. That's where you could see, this. And the immediate term here, probably the next couple of days, I'll highlight what that looks like. So the Nasdaq's actually been a little bit weaker than the S&P. So I'll bet you too, if you do some measurements here, like a smaller degree, then you'll likely see that it aligns pretty well, or at least close to. So a new high, sorry, not a new high, but typically you see these like ABC legs that are, how do you say it? Like they're usually like A equals C, especially when you're doing these like wave ascensions. And now we have enough data where we can start drawing like trend lines and things like that, where you can kind of see that this apex here, you're starting to see this sort of developing wedge here. But I actually think it's a little bit different. And this is where I'll probably get a lot of crap if it's wrong, but we're gonna go with it. So I think that typically in a wave 4, or sorry, typically when you see this like this ABC sort of thing start to form, like you see the first signal is your big drop, okay, and then usually you'll have a retracement, and then you'll have a continuation. Well, we only tested that 50 DMA on some decent volume, but not like really high volume. The really high volume came up top where you had the big sells. So you also got to keep in mind too that like once you start to see these big sells, you're seeing distribution of lots of shares, not just this little sort of crap here where you get this little drop here and there. You see these larger magnitude sort of moves. Now, I kind of think that let me pull up my other chart here real quick. Sorry, I know this is a little cluttered, but this is what I'm doing during the day, I guess. Okay, so I think it's actually more clear to see on this chart because I've already got all the lines measured out and everything. So if you draw a like a Fibonacci retrace all the way up from from the bottom here, which is which we put in back on Friday, and then you get this sort of retrace up here. You'll see today that it actually wasn't really unexpected that that we had this sort of sea leg up here, and I kind of explain why. I mean, sure, of course, hindsight's 2020, right? But keep in mind now we've already got these two points here for a trend line, and we also have a longer term trend line that's from this this prior pattern. It's a little, it's kind of a little squishy here, but it still represents the same thing. So we do have this strength here, and what this also signifies is that there's been a rejection here, which is a back test. So now we've had two back tests of this broken lower trend line that happened back on Friday, right here and here, where they're significant because they didn't just go a little bit. Like we're talking deep. And you guys saw that. I mean, it was 1.5%, maybe a little bit more, and that happened. I think I was talking about this on Monday, like, hey, market's open, high, but typically what you'll see here is this was a pretty deep cut. And if it was a little bit more shallow, like just kind of model this out here, it was a little bit more shallow, we probably would have seen a little bit more of like a civilized, kind of price action here. But instead, we get these wider swings. And that's also common when that's common when you first start to see the market move in big ways. So again, we've had nothing but up, crazy mania. Look at these crazy RSIs. That kind of thing. Just brief touches of oversold indicators here, but mostly it's been on average above the 60s, really, since well, this is zoomed in, but if I go to the daily, you see that the strength is just on average, it's pretty damn high. It's 65 for an RSI over the last couple of days is really, not a couple of days, sorry, I'm talking like months here, is astounding. So at least in my opinion. Oh, sorry, and also one thing I wanted to show you. So look at the top wicks here. For so you see the ascension going up here. You kind of see the volume is average, but it's being sold into. I've been remarking about distribution for a while, but on the daily level, you can see a lot of these different top wicks, and you can see the bottom wicks too. So right now, it kind of looks like the buyers and sellers are like even, I guess. With some of these, like we still get some wicks on the bottom and the top. They're testing resistance and support, but what you're also seeing is when you move down to the other candles here, and I think, go ahead, you're gonna ask a question? Oh, okay. So what I can, so if you look at like the minute chart here, you can see all this red in the morning, and then you get a little bit of blue to buy up off the bottom, and then you get nothing more but red. And then you're also seeing that you have these bigger like sell spikes. This is not a common volume distribution for the day. The same thing with like these overnight sort of moves here. You can see it's all spiky and all kind of weird. This is a little bit more of like a normal day. You can see where it's just nothing but buying and a couple little sell-offs to shake out some buyers. But I guess I wanted to show you guys that because it looks like on the surface it's relatively bullish, but I think that there's a lot of selling that's going on under the surface, and what that means for us is that we want to try to identify where these pivot points are. So overall, typically how you'll do this is you have these like 5 connection points. So right now, I think what you're seeing is typically you see a wave, like a wave one. Like it's really difficult to forecast like where a wave one is going to stop, because you guys have seen in the past that it's only pulled back just like 0.5% before the dip was already bought. But now, since we had such a break of this constant upward trend, now you're starting to see more people pile in some bearish bets. We have a skewed put to call ratio. We have all sorts of fun stuff like that going on. So I wanted to mention that just because as we're climbing up higher, it's like, yeah, you're climbing the wall of worry, but you can also now start to see that we're hitting these really large volume shelves. And you also saw that the last time we hit these, the last 2 times, it sold off with style, really. So now, get to the point, Gaines. The point is, anytime you see these sort of like triangles and gaps and things like that, like gaps typically get filled. So we saw that yesterday, really, and then today, or well, part of yesterday, I guess, and then today, we're starting to see a lot of these ABCs, and within these different patterns, these ABCs can really overlap each other. So you can get funny looking truncated sea legs, all sorts of fun stuff. But this is still typically, it's still typically one of those things where you really don't have a problem with. Sorry, my kids are yelling in the background. But you really don't you don't have. Once you get these connection points, and usually you just need 4 of them, then you've already put in the 4th leg of 5. So what I'm thinking we will see is the same thing we saw yesterday and the day before, where it's like you get a little bit of buying, and then you get a drop. Now, at this time though, typically you can have like sea legs that overlap in these things. There's, the rules kind of break down with wave theory around here, but this is where I think we're finally going to get some sort of break. Now, if I'm wrong, you see something like this, where you'll see like another truncated sea leg where we have another test. Let's say I think like the 24,500 levels is I think a very common like level to test right now. And with the S&P, I think it's like I want to say it's like the 6620 range, 6610. You guys can kind of see we've had 1, 2, 3, 4. One test was almost successful, but I think this is just a sell down to get out of some trap shorts. But anyways, so typically when you see these sort of ascending wedges, you can be early. So like yesterday, I posted a chart where it had this ABC. So yesterday I posted a chart where it was something like this, where it went down and it broke through. Well, I mean, in hindsight, it's 2020, right? So now these guys are just distributing more and consolidating. So now I think what's happening is that they've already tested that trend line. And now we've also seen this rejection at this 0.786 level, which if it is a wave 2, not a B wave, typically you'll see like a violent rejection. So, I mean, it's only been a day and some change, really. But I think what you might see here is that, we have this point of control right around this 24,850 kind of level. Either we're going to see like one last kind of, head higher sort of thing, maybe tonight, likely tonight. And you might see something like this, where maybe heads lower, and then I call this pattern expansion, where then you kind of like reset expectations, where if you kind of violate that trend line, but then it gets bought up right away. And the reason I'm explaining this is because we don't see wave 2s at the downside very often. And I feel like it's a learning opportunity for people, people who want to learn more about like charting wave theory and stuff, and like kind of how to read what's going on. So again, if this does break lower, I haven't really ever seen a sea leg that kind of truncates, except for a handful of times. It's very rare, above where like the A leg would stop. But these are pretty clear counts, and if we do see some sort of expansion, it's a possibility that we could see just a little bit higher here, and that I think is probably the most bullish scenario. I don't see like a new high anytime soon, just because like look at all this red that we got going here. Like you can see significantly different than some of the other prior days, where you can see like on average it looks like it's a little bit more buy heavy or sell heavy. In the last 4 days, really, it's been, I'd say, very, very sell heavy, where the bears have kind of dominated, but they also like take their foot off the gas and let the bulls buy it up, because hey, why sell high when you can sell higher, right? So that's the theory that we have here. So that's the bullish case. Now let's talk about what happens if this breaks lower, because that's where I think we're going to see some action here. So in theory, we could have two setups. One setup here would be that we see like a sea leg, and let me may head back to my other chart to make it a little easier for you guys to see. All right, so let's start measuring these things here. So let's say that we have like an ABC, and we've already seen the top as of like this morning. So or at least like the top of wave 2. So the obvious thing that sticks out on the chart here is we see like an A equals C sort of move. That's kind of like weak sauce correction. You still get some, bears still get some red meat, but not a lot really. I mean, when you think about it, it's only 6%. That's peanuts, especially for October, where we're already positive in October. So really, I would say one of the other case scenarios here for an ABC would be we stop right around here at this 1.236 extension. I think that the buyers kind of know this is coming. So that's why I think you've been seeing a lot of like whipsaw price action, because it's dip buyers, but it's also deep-pocketed buyers that can kind of see that there's a lot more sell pressure now than there was a couple weeks ago or a couple months ago. So now I think what they're trying to do is they're trying to be aggressive to jump back up and rescue their trap positions up here. I mean, you can kind of see that there's a lot of buy volume up here, right around this like 24,900 level, where I think that there's still some buyers trapped there. I mean, you're talking billions and billions of dollars, but you know what? They had their fun. So I don't feel bad for them. That's what, no crime in the casino, right, guys? So bears have been crying for years, But anyways, so this is your first setup, where if everything goes according to plans and counts and stuff like that, even if you do see another little high like that, to kind of like continue this pattern, let's say that let's say that I was wrong here and it ends up being like a very wide ABC, something like this. Anyways, I just wanted to mention that like there still could be some upside, but in my opinion, the upside here is really just like kind of making a mountain out of a molehill almost, where these incremental new highs here, like there's really not that much from the prior day. We're talking 0.3%. I mean, that's nothing. Considering how we have 1.5% swings throughout the day, that's really nothing. But anyways, so that's your first like bear scenario for an ABC. What I think we might see, and this is just an example. Don't throw cabbage at me in the town square. Technically, you have all the way until you get down to about here before any sort of a peak of wave 4. So right around here, that's why this stopped here before, is because this is a great spot for bulls to buy, because if this sell candle violated this top over here, then it sort of invalidates a larger bullish scenario, where you could make the argument that this is like a 1, 2, 3, 4, 5, and it very well might be the case. But I still think we'll see, we'll see what's real sooner versus later. So I think that if we do breach this line on a retest and we head lower, then we know for sure that the rally's over. And if that does happen, then I think you'll see a lot more like bearish positioning. You'll see a lot less bulls buying in, that kind of thing. But typical of a wave 2, that's where you get people swarming in, dip buyers, people starting to realize that all's not well. Like everybody. So there's confusion, but still people thinking that the primary trend is going to resume. So the most extreme bearish scenario I can think of here is, let's say we get a real deep, crazy catalyst. You could see something like this. And actually, this is what I think we are going to see. And I have a reason for that. So this is purely technical. Probably more like that. So this is purely technical here. I don't want to bore you guys to death with all the wave counts and whatever. I mean, I've already probably bored you guys to death with the wave counts, but in reality, though, once you have these like massive rallies, they have to be corrected eventually. Now, an ABC correction will put us right at this point of control, and I think where the bears' challenge here is going to be selling past this 23,440 or 23,500 level. But ultimately, I think where it will stop is right around like this 22, like 675 kind of thing, because this is the prior wave or low. I think I highlighted this before. That like irregular sort of weird truncated pattern. But when you zoom out, if you do breach this sort of low, statistically, when you're looking at these types of patterns, it's like a 76% like success rate for like once this level is breached, like it's over, man. You might see something like this as a retrace, but ultimately on a larger scale, you would see something more along the lines of like this. And I'll change the colors here in a second, and I'll actually measure this out for you guys. So this would be like I guess, there are different names for corrections. I don't want to go into all that stuff. Like, there's zigzags and irregulars and all sort of crap like that. You guys don't really need to know all that stuff. The only thing you really need to know is that once there's a big rally, there's a correction. So, and it's really kind of my job to kind of distill out like, where the fake out points are. If we do see something like this, like we could easily see like an ABC if it bounces off the 50 here, which looks reasonable, right? I mean, that would give us a left shoulder ahead and a right shoulder, and that would be a pretty solid head and shoulders pattern, which are common with major tops, just because the sentiment typically drives that last leg up, and sometimes you could find it pull up a little bit higher, and your neckline kind of changes the symmetry a little bit. So you could see something sort of like this, and I think this is actually what the 2008 chart looks like. If I can remember, it's got this like weird ascending angle sort of thing before you get that right shoulder, and then there's just a drop straight to hell. So, for lack of better terminology, but I mean, you guys can start to see like the longer term patterns, right? Like you can kind of see, well, yeah, we might actually get a pretty nice drop here. I mean, it's really not much in the grand scheme of things. It's 10%, but you can get a very viable dip here, and then ride that all the way through probably November and get your Santa rally, and then come January, then that's it. And that's just speculation at this point, but at least from like a charting perspective, like as soon as you get this breach of this like prior wave 4 low, then typically you've already started the corrective cycle on the backside of the rally. And when you zoom out, if you think about it, like you look at what happened in April, peanuts, guys. So like you get some, like, I love Alex to death, but sometimes you got to have a correction. It's okay to say things are going to sell off, and he's been right on the way up and things like that. But what I wanted to say about it is, even a correction like this could still set you up for another bull run. Maybe if it sold down a little bit more, it could still set you up for something like this, and you got yourself, a weird pattern, but it's still a valid pattern. So if I measure this for you guys, sorry, 1 second. So, hey, Don, sorry you joined. So let's assume here that we actually do get a beefy sort of correction. I'll measure it here. It's like get your first drop, then you get your Santa rally. And let me measure this without so much crap in the way. All right, so let's say kind of bounces right where everybody wants to buy the dip. So typically you'll get an extension for a wave 3 down, and then you'll get maybe some sort of high pop up here for a wave 5 or a wave 4, sorry, and then you get like a continuation. So, and this is, I'm just making assumptions here that this wave 1 would actually go that low, but that would actually take you should take about 0.618 of the entire range here from the April low. And that would give you a really sizable correction. Now, you could also see something like this, where it's just a really deep dive, but it happens really fast. And then you get this sort of, like a megaphone pattern, and this is possible too. So let's not ignore that. But again, it's going to be tough to make a call on that, just because the patterns are, they haven't really seen a lot of, they've been seeing a lot of craziness lately. So, but this is like just a measurement here where you can kind of see that things started to line up a little bit, where you've got this point of control, which is sitting right on this fib retracement level, which, it's amazing when like the symmetry aligns like that, but typically that means something. Typically that means that this has been thought out already by somebody else who has a lot more money than we do. So that's the only thing I would say about that, is that you have to separate opinion from what you're seeing in the charts versus sentiment and stuff like that, and it's really hard to distill all that down. But if you just kind of read the chart and like Alex says, like follow the chart, not really the news, right? The news kicks things off, or the tail wags the dog with that. We're like, oh, the news is blamed for somebody dropped their ice cream on the street and the market sold off 3%. It's like, okay, well, no, it's just because we've been XYZ. But anyways, so there's a possibility for this, and since we had that big drop in April, revisiting that low and actually trying to hit that again, I think is reasonable. So right around this like 16,000 level for Nasdaq. I think it's right around like the 4,500 level, something like that for S&P. But the craziest part about it is that it's a 35% correction, and we still just got back down to, if we had to look in the past, I mean, you're looking at January of 24. Like that's the kind of mania market that you're in right now. That would take, if you have a 34% correction years ago, that would be, that would like wipe out everybody, So, and it would take a long time to retrace 35% of the market. And, once you like what we saw in April, it's truly incredible. I mean, it's 53% of a rally here from that huge dip. It only took a couple months. So people would say like, well, I think we're headed for a blow off top next. No, I think we're already in it. like it's, I mean, how much other like percent return do you want, to qualify for some sort of blow off top, at least historically speaking. So the long story short about this entire thing, I want to move on, but there is the possibility for a major sort of correction, and you're starting to see weak data for jobs. You're starting to see just weird stuff going on, like bad news starting to matter again, like I mentioned at the beginning of the call. And not that I'm trying to like scare the crap out of you guys, but the reality is we just still need to be careful. And I feel like such a worry wart when it comes to this sort of stuff when I'm doing my morning post and stuff. But I do think that the potential for something like this is real. We get stuck in our our daily routines of oh yeah, this looks like it's going to be bullish and we're going to buy the dip here. Well, the buying the dips strategy has been rocking and rolling for years, and like you just can't lose. But eventually there's valuations you're going to struggle to justify, and it's going to be just going to be a hard uphill climb. So I'll stop there, but basically I think the next couple weeks are going to be very important for what happens in the next 6 months. And that'll be my final thought on the matter, as Jerry Springer would say. Questions, comments, concerns about equities or indexes, at least? Nothing? You guys are my all-stars. Yes, Mr. Greenberg.
So I missed most of it so far, but what would be
so good.
What would be the sign? Where does it have to go to say, okay, now we're started?
Now we're started.
Break the recent low that we just made.
Yes, exactly. And that's where I was trying to highlight before, where let's say you've got this wave count here, you've got a wave 3 in the middle. Technically, you could make a higher high, and this is like a wave 4, as long as it doesn't breach the last low. But that would be like the all hands on deck sort of reconsider or at least hedge your longs. Is that that kind of 23 or well really the 24,000 level, I guess you could say.
But I mean,
Um,
we're still below the moving averages right now. The 8 and the 21,
8 and 20, yeah, that's correct. Yep.
still below them.
The purple one is the 50, and the turquoise one down here is the 200. So we
Right.
already just tested 50, real quick. But there also wasn't a lot of accumulation either. So what you're seeing is, I think, a lot of covering from the bulls. Just because, like, if you kind of zoom into this, we'll do like this volume profile. Anchored. Here we go, fixed range. So if you look at, from peak to trough here, oops, I did that wrong. Yeah, peak to trough. You see that there's still a lot of this accumulation here, like a significant amount of accumulation for shorts and selling at the 64, or sorry, the 24,600 level. So that's also why I keep thinking, or I keep, thinking we're going to revisit this. But there's also, like this morning, we also see a lot of this buy delta up top here, and we still have buy delta overall, except when we get down to this, this like 24,300 level. So there just hasn't been enough accumulation really. So a lot of these shares they probably have very high cost basis. So that's probably why we're seeing a lot of this, wave 2 type of action where bulls buy every dip like it's religion. But my opinion on the matter, and I'll just go over this for just 1 second. My opinion on the matter is that we've got this ascending wedge thing going on here, and we haven't touched the bottom trend line yet. So either we see some sort of like we see something like this tomorrow, or we see some pattern expansion, and then we see another one of these up, or we see the final sort of capitulation move. We're like, hey guys, we're done with the buying. Let's move on with the selling. You see something sort of like that, or like an ABC. But again, it all kind of hinges right here, right at this, right at that level. So did I answer your question?
Yes.
Cool.
As far as I don't think we need a 34% decline though to create pain.
Yes.
With the amount of leverage today compared to in previous times, it's going to really hit even with a small decline.
Yeah, I think if you have like a 10% decline in like a couple days, you'll get some pretty heavy margin calls, and you'll get a lot of selling in order to meet those calls.
Mm-hmm.
So you might actually. So what I would actually recommend is towards the end of the day, I'd say like maybe the last. So like if we get a big sell day, so like we had, I found this very interesting. After market, we had I think we had a lot of margin calls. Hold on, let me see if I can find it for you. So this part right here. So right around here, end of day, we get some, kind of frittering around here, thinking that, maybe somebody's going to buy it. But this is kind of where I think people are meeting calls meeting margin calls, because that move was really fast, really swift. And there was a lot of zero DTE that was trapped up top that day. And you just took a huge dive here at the end. This is probably mechanical selling from like brokers. So that 1% there, I mean, that's still a lot of shares to, maybe meet some calls, which is probably also why then you saw this huge jump up higher, because, or on Sunday, because the dealers had to hedge by buying, that mechanical sort of opposite buying. So all this crazy put buying and things like that, they had the whole weekend to let things calm down a little bit. And then we had that big jump. So that's kind of why I think we had that sort of like extreme weather where, if you kind of think about it, like this level here was pretty close to close. Like when we had this retracement yesterday, it got really close there. So bears are able to exit some shorts, maybe flip long, cover, something like that. But then you kind of see this slow, steady decline. And I just really think that the bears are in control of this whole thing right now, and they're just kind of letting the bulls run it. But yeah, I kind of think that little low that we put in today, that was pretty fast and serious, but got it bought up right away. And I think that was just mechanical buying from dealers and also dip buying. So we should see tonight. You can already kind of see it's dipping a little bit, but I think we might see here tonight some action where sucked in more bulls again, and we might see something kind of like this, and then maybe head back down. So this should be plenty of price action for the night. where you get just a little bit more bull sucked in here, and then you drop it, and maybe we have our test tomorrow, and then Friday like a follow through. So that's at least what I think. But I've been completely surprised before. So okay, so let's flip it here. If you guys don't have any more questions, I'm happy to answer some. You'll put them in discussion or whatnot. All right, so let's talk about let's go in reverse. Let's talk about MSTR. Okay, so I guess before I go on with that, Will, did you have any like specific questions like about longs or shorts, or just like shorts?
Well, I play MST. Can you hear me?
Yeah.
I play it a lot, and I'm up 100% this year on MSTR
Yes!
better than anything else.
Yes, I'm so excited about that. It's great.
But I'm getting more and more concerned about his leverage coming home to roost.
Yeah.
And separating some from more of the stable coins. So I'm interested in your take of if you think it's everybody's starting to think about it. They're looking for a bottom in MSTR for the next run up in Bitcoin, which will happen because sentiment still hasn't given up. But
yeah,
I don't know that 265 or whatever it is going to be that point. I was wondering what you thought.
Yeah, so I guess before we answer, when you're talking about the amount of leverage that they have, I'm not super familiar with that in specifics. Is there something like you sent me an article or anything like that?
Well, he's selling shares and supposedly going to pay dividends on based on Bitcoin going up. So he's in effect over leveraging the shares in MicroStrategy. Ooh. And if Bitcoin doesn't go up, then he's got a huge problem.
Big problem. Yep, that sounds like WorldCom to me or Enron, just leveraging different LLCs to shell game your debt away. I mean, like looking at this balance sheet or some of these earnings here. Where'd it go? Sorry, I thought the financials. Well, okay. Anyways, there's tricky accounting things you can do to knock your earnings out of the park. I can sell some Bitcoin, I can do whatever and get some more cash on hand. But if you see all these other prior earnings reports, I mean, they're terrible. They're earning, EPS and stuff like that. So I think it's certainly a speculative venture, and if they're going to leverage what they have, then yeah, even more reason not to go along with size. I mean, I still have that hedge there just because I'm also starting to see that, like we've got this sort of declining volume here. And when you have a convergence with selling, that typically means that you're getting ready for a bounce because sellers are running out of gas, but buyers are also accumulating. So I think that you could see something along the lines of, so 265, yeah, that would be, it would still be like this 0.618 retrace. But that's, sorry, not retrace. It's like an extension. So if I were to measure this, yeah, it's already gone below. Okay, sorry, 1 second. I'll give you the premium gains analysis here. Okay, so yeah, right now it's sitting right at this 0.786 level, and I chose this like 265 level here for this final bear target because that's the 0.886 field level, which is I'm seeing a lot of in the last couple months in the markets. Like the retracements are stopping around there or going even a little bit further to like these 0.941. So like they're getting really, really close to the lows and then they're exploding up, that kind of thing. And also too, things like trend lines have some magical powers behind them. So you could see like a quick stab, where it just just kind of melts down a little bit and then bounces really quick. I mean, this would be the ideal scenario, I guess. You exit shorts, jump on some longs, that kind of thing, and play both sides. But kind of does tie back to towards Bitcoin a bit. I guess the one thing where I'm still a little bit wary of is that if I'm looking at the chart patterns here, like I see an impulse wave, but I also see an impulse wave here, which means that either side of the pattern isn't complete now. So that just means that it just adds more confusion to the analysis. But I think too that eventually it'll materialize. I think probably what we might see if Bitcoin and crypto stay elevated the way that they have been, and let's say I don't think it's going to be like a reserve currency, or I don't think it's going to be anything that will replace the dollar or whatever. I think crypto's here to stay, but it's still highly volatile. You saw Bitcoin sink 12% on Friday afternoon. I mean, that's incredible. If you were levered with Bitcoin, you're toast. If you didn't hedge, and I'm sure there's a lot of people like that. But also too, you did get a buy signal that fired here, but that was back in September. And now also we're seeing the same sort of like H style pattern here, which it just kind of means that like the wave 5 isn't done, or at least it looks like the wave 5 isn't quite done. So if you see, I do think we'll probably see like a test of the 200 with crypto, or at least with like Bitcoin here, that this last low. I think this is reasonable here. Yeah, just like 107.355. That should be enough juice to get MSTR probably down to where it wants to be. So gains get out of his shorts, and but no, I think it's a great question, and it's one of those things that I can't like fully answer unless I know what happens with the rest of equities, because big like if Nasdaq and the S&P go down, MSCI should go down as well. And I think that's kind of irrespective of Bitcoin, but it doesn't help. It doesn't hurt if Bitcoin goes down. So I think either Bitcoin will lead equities, or either the Nasdaq will lead equities, or whatever. It's just more along the lines of, I think they'll all ships kind of rise and fall with the tide. So I think you'll probably see like another quick dip, but I do think it's getting to the point where if you start to accumulate some longs, I think you'll be able to get out of them without much trouble, because there will be some sort of reflective buy bounce, like I think they just drew that. So something kind of like that. So even if you pick up some like at the bottom of the range, let's say we have that that ABC here, like for Nasdaq or S&P, same kind of thing. If we have that quick little stab down, then we should get some sort of bottoming short term, and then some sort of recovery. So does that make sense, or am I crazy?
Yeah, and there's a lot of disparity recently in the price of MicroStrategy and the price of Bitcoin. I mean, Bitcoin hit a new high, and MicroStrategy didn't follow it at all.
Sure did not.
I think there's another thing to consider specifically with strategy, MicroStrategy. I forget when we first started looking at SMST as a way to short this. Maybe it was early in the spring or something, or even before that.
It was. I want to say it was right around here.
Or maybe it was when it was really going bonkers. So then that the premium that the market cap of it was MicroStrategy at that time had over the value of its Bitcoin holdings. It's kind of like what Alex talks about with the ETH holding companies, what is the premium or discount to NAV. It was 3x what the value of their Bitcoin holding was. I forget exactly what the multiplier was, but the number was just crazy. Yeah. And so I think that kind of set the stage for some volatility. If the price of Bitcoin started to fall, this could really start to collapse. In the meantime, it's really tightened up to, it's at 1.5 now. So they don't really have quite as much. I'm not sure how to think of that 3 times now. It's almost like leverage on top of leverage or something.
Yeah.
So in terms of how this responds to the price of Bitcoin, I would imagine having much less premium maybe stabilizes it a bit in terms of like, if Bitcoin starts to fall, this may not collapse. Maybe it tracks it like a little bit closer. This is pure speculation on my part, but like I think of that NAV as just like when it was so much higher, like 3x, as just making this wildly volatile. Whereas maybe that's chilled out a little bit as the NAV is not that 1.5 is reasonable. It's still like kind of crazy. It's not as crazy as it was.
No, I think that's a really good point. You know, I didn't actually think about that. So it's like, yeah, I mean, you're over levered, and then you're potentially, you know, over levered again.
I'll post in like the messages here. They
great.
track that kind of tracks what the current premium is and how much actual Bitcoin they've accumulated and its value and all that. It's kind of cool.
Awesome. Yeah, thank you for sharing. That's great. So yeah, I mean, I think overall, like, you know, I think it will eventually kind of snap back to track with Bitcoin, but you know, I do agree it was very overvalued, and it's still overvalued in my opinion. But it's kind of like the Carnival Cruise effect, you know, where if they get into trouble, they can sell a Bitcoin. If Carnival gets in trouble, they can sell a ship, you know. But I mean, at least you can like stand on a ship deck. You know, you can't really stand on a crypto. So like the floor is not exactly a floor for them. So if the floor gets pulled out with a crypto rug pull, again, 12% on a Friday, that can happen. And, you know, there's no circuit breakers for any of that stuff, is there? I mean, I don't know. I know if like there is for the Nasdaq, but still, that's a crazy decline. And you can trade on the weekends, which is even worse. So people get drunk and go to the bar and then trade Bitcoin, and then it collapses. And, you know, it's just, you know, very volatile.
And just the amount of leverage that the average crypto exchange, at least outside of the US, allows their clients to have just creates so much volatility when they start getting liquidated, which is kind of what happened on Friday and then through the weekend. Like those moves can be violent.
Yeah.
So, yeah,
and also too, like you've got this yes sir, Don. Go ahead, Don.
I was just going to say, did anybody see the story on CNN last night about this BTM Bitmine depot? You know, they have the machines that you put money in and buy crypto in places, and how they are, you know, people are getting scammed all over the place because there's no controls over it, and these scammers are getting people to go in and use these machines and send them money, and of course they never get it. And this BTM gets a percentage of every transaction, like 20%. And they said on the story that like 3/4 of the transactions are scams.
Oh, it's crazy. Yeah, I
That's
can believe it.
Yeah. They were playing that again today on CNN.
Yeah, there's a second half tonight.
I'll have to look at that. But yeah, I mean, you know, clearly, guys, I mean, you can see that there's a lot of risk out there with you know, just staying long and strong and going to go cut the grass. So
and a lot of people Friday when it took that drop couldn't get a trade off. I mean, they you know, like the brokers were like, oh, not answering the phone.
Yeah, I wonder why. They'd love to take your money, you know, but no, it's so true. And like what I'm always been a big fan of, like, you know, there's some people that push it to the limit where they have longs until like the very day that, and they just keep moving up stops like the very day until there's like a big old crash or whatever. And like, you do run the risk of brokers not functioning. I mean, I've seen it several times where I haven't been able to get a trade in, but good thing that, like, you know, you scale into positions instead of just wait until everything dies and then you add shorts. Like then you're paying a premium because VIX is higher, or, you know, maybe it happens overnight. You know what I mean? So it's like, you always want to kind of keep that in the back of your mind, like use proper hedging and risk management. But it's awful hard to do when, when market's been on easy mode and you just have to hit buy, right? So I think a lot of people are going to get wiped out just because there's so many, like, it's just a house of cards, a house of leveraged cards. There's so much options gamma out there, tons of leverage, and, margin requirements are very low, so anyways, I should probably wrap up here because I gotta get these children of mine fed, but yeah, they can wait. They eat enough. But no, good discussion, guys. I appreciate it. That's it's like, I'm only as good as, you're only as good as the people that surround you, and you like, you think stuff, and then all of a sudden you're like, oh wait, I didn't think about that, or so I think it's, I believe that a community of traders and stuff is much better than like a single person calling all the shots. Okay, so this so let's take a look at the yield just real quick. The yield here is in like a multi-year kind of consolidation pattern. I think we might see some sort of support. It might even drift a little bit lower to like 3.85, but I do think that you are going to see inflation come back here, whether they want to admit it or not. Sorry, those are my dogs. I apologize. I don't know if you can hear them. But yeah, the yield so far, I think, is getting pushed down, but I think that eventually you're going to see a flight to those sort of trades like yields and just generating money off cash, because I think there's going to be a lot of like panic kind of stuff out there. But again, I don't want to scare everybody to death. I think that it'll be a slow moving kind of thing, but I do think that we'll see some sort of bottom here, probably within the next month or so, and then get some good traction on that. Gold, I can't even explain this, guys. Just by, I don't know. Like, I mean, you look at something like this, you see all these bottom wicks here, like, come on. Like, so I mean, it's a speculator's dream, but I don't know where it's going to stop. I really don't. I'm mad enough to admit that I just don't know. So I mean, this is clearly like a wave 3, but I just wish I would have held on to those longs. That's what we all say. And silver is just as bad, but I think silver's got a little bit more room to run. So I think this 60 level here, I think we are going to tap this like this wave 3, or maybe just below it or something. We might have something like that. But yeah, it's running, and it's only got a little tiny dip here. But other than that, I mean, you got all these sell signals on the way up from the market indicators, and that just means crap. So yeah, metals are running. Oil and all the energy stuff though is a little bit depressed, and I'm very, like, I wouldn't say I'm confused about it, but I think that again there's some sort of funny business going on. There's some sort of artificial pushing down of energy prices to tighten the noose on Russia or something, because they get all the refineries and stuff blown up by the Ukraine, and they're importing gas now, and like the price of oil is still drops. Like, okay, guys, you can't tell me markets aren't manipulated. But so and also too, like for gas, okay, like we're also coming up on stockpiling season, right? And seasonality says September was supposed to be the best month for gas. Instead, it was the worst month for gas in the last several Septembers. So there just seems to be some funny work at foot here with normal supply and demand sort of things that you could have some malicious actors on. But in my opinion, at least, that there's still some opportunity here. Like, once I think the air gets let out of equities, we should see some bounces in like more commodities. Gold and silver, they've just been going nuts, but other energy prices, people are going to look for dips to buy that aren't equities, especially if they're melting down. So that's kind of why I think just by default there'll be an influx of capital from traders that don't want to trade equities. Stocks here, I think it kind of stops around here, 287, 280, 289, maybe 290 again. But if we do see a drop overnight, then I think this might be it for a retrace. I think it's about time for stocks to chill out a little bit. It's been going gangbusters for a while, but there's always a possibility here you might see this like 5-wave kind of situation happen. But I still think it needs to make like a low here. It needs to test the 50, and for that to happen, you got to have Nvidia do it. But Nvidia also had a nice a nice little drift down today too. The concern I have in Nvidia is that, it does look like it put in this 5 wave here. Actually kind of looks like a ABC, but I kind of think that we might see, maybe like a little bit lower low. This is what concerns me, is that you'll hit this like this 200 top, and it'll be worth like 30% of US GDP. So, that's my thoughts on that. But we'll still just have to keep an eye on it, because this does look like a long-term wave 5 that is completed. And I do think that you will see some sort of some sort of drift down, and eventually, head back down to test some breakout zones. Tesla here. Tesla's been a little weird. I think this has been distribution up here. You can kind of tell, and it's got the same thing as like Nvidia had with the 5 waves, but I think we might see something a little bit more drastic, like at least a test of the 50 DMA here. All ships rise and fall at the tide. So, all right, that's about all I got today. If you guys have any questions, now's the time. I got about probably 2 minutes.
I have one thought. I think you just accumulate the natural gas here.
Yeah.
I think the downside from here is so minimal. You're going into the season.
Yeah, also look at that volume too. That's that convergence.
Yeah, I mean,
Oh.
the only negative is the contango.
That's true.
The January contract is like $1 higher than where we are.
Yeah.
But I mean, if you're playing Boyle, some of that gets evened out. But
right.
I think the risk reward is just a no-brainer.
Yeah. So I'm probably going to add to it as soon as I can get out of another, get out of any other trade at a profit. But I need to balance some more position size. But yeah, no, I agree. I think even if it drifts down just a little bit lower, I think it's still a bargain.
I've been buying the options for January. I just bought a March one, and I scaled down, like I had like 25 and 26 or something, and I sold them and moved down and bought the 20s.
Okay, well,
yeah,
awesome.
So I'm just, that's what I did with the silver a couple years ago. It kept forming that little bottom, rounded bottom, and I just kept adding and adding and adding.
Yeah, and then Don's going to pay for the gains cruise in 2026.
Yeah, I mean, the palladium. We looked at that palladium chart.
Oh man, yeah, it's nuts.
It's the same thing. I'm still holding on to that.
Still holding, nice. Okay, we're gonna have to upgrade property soon then. Hey, get yourself a ranch.
Well, I'm in the downsizing mode at this point.
Okay, yeah, that's good. That's good. Yeah. Okay, guys. Well, thanks for joining today. I appreciate it. I think we're about to see some interesting stuff happen here. Of course, that's just my opinion. Bulls could step over my face again. So it could happen. But yeah, I think that this week we'll see some good stuff. We'll see some fireworks at least, and get some volatility, because you can't really make a lot of money without volatility. So, all right, guys, let me know if you have any questions and discussion and whatnot, and have a great night.
Take care.
See you later.